So I'm scrolling through crypto Twitter last week, and suddenly everyone's talking about their AI agents trading for them. Not like helping them trade, literally trading on their own. And I thought, is this actually happening, or is this just another crypto fever dream?
It's happening, and it's weirder than you think.
Okay, hit me. What are we actually talking about here?
There's this project called OpenClaw. It started as someone's side project in late 2025, got rebranded a couple times because of trademark drama, and now it's basically an autonomous AI assistant that doesn't just chat with you, it actually does things.
Like what? Sends emails?
Yeah, that, but also manages your calendar, monitors your wallet activity, automates airdrop workflows. And apparently, in some cases, people are giving it trading accounts and telling it to go make money.
Wait, what?
There's this viral post from a user who gave their OpenClaw agent a $2,000 trading wallet on Hyperliquid and basically said, if you want the GPU you asked for, earn it. The agent now trades crypto, stocks, commodities 24/7. It monitors Twitter sentiment, watches for Trump posts, makes its own trading decisions.
I don't even know where to start with that. Is it making money?
That part wasn't clear from the post, but here's the thing. The story isn't really about whether this one agent is profitable. It's about what happens when this kind of automation scales.
Right, because if one person's doing it as an experiment, that's cute. If 10,000 people are doing it, that's a market force.
Exactly. And we're already seeing activity show up in prediction markets. OpenClaw agents are interacting directly with Poly market positions. Polygon reported on it. Solana's racing to integrate these agents. Virtual Protocol on Base just announced that every OpenClaw agent can now discover, hire, and pay other AI agents on-chain.
Okay, so let's back up for a second. What actually is OpenClaw? Because I feel like we jumped straight to the sci-fi part.
Fair. OpenClaw is open source. It was created by a developer named Peter Steinberger. Started as Clawbot, became Moltbot after Anthropic had trademark concerns, then settled on OpenClaw. The GitHub repo went from about 7,800 stars in late January to over 147,000 within days.
That's explosive.
Yeah, and what makes it different from your typical AI chatbot is three things. First, it has persistent memory. It remembers past conversations, learns your preferences, tracks ongoing projects. Second, it's proactive. It can ping you with briefings or reminders without you asking. And third, it has real automation. It can execute tasks across connected tools without you clicking buttons.
So it's less like asking ChatGPT a question and more like having an assistant who actually has your passwords.
That's a good way to put it, and that's also where things get interesting and potentially concerning.
Yeah, I mean, the obvious question is what could go wrong? Because my first thought is this sounds like a great way to accidentally lose a lot of money very quickly.
That's not paranoia, that's just risk assessment. If you misconfigure permissions, or if the agent gets compromised, or if it just makes a bad call based on faulty data, you could see unintended transactions. And unlike a human trader who might second-guess themselves, an agent just executes.
Right, and there's no "Are you sure" button.
Well, you could build one in, but the whole appeal of these systems is that they operate autonomously. If you're constantly approving every action, you're just building a really complicated user interface.
So, what about the market integrity side? Like, if you have thousands of these agents all trading based on similar signals, say they're all watching Twitter sentiment, doesn't that create feedback loops?
Almost certainly. Imagine a bunch of agents all trained to react to the same kind of information. Someone tweets something bullish, the agents pick it up, they buy, the price moves, more agents see the price movement and interpret it as confirmation, they buy more. You get amplification.
And on the flip side, if something spooks them all at once, they could all sell simultaneously.
Exactly. Prediction markets are especially vulnerable to this because they're designed to respond quickly to new information. You could see really sharp, really fast moves that aren't necessarily reflecting human judgment, just algorithmic pylons.
Okay, but let's play devil's advocate for a second. Isn't this just the next evolution of what we already have? High-frequency trading firms have been doing automated trading for decades.
True, but there's a difference in scale and accessibility. High-frequency trading requires serious infrastructure, capital, regulatory compliance. These agents, you can spin one up from a GitHub repo. The barrier to entry is dramatically lower.
So you're saying democratization of algorithmic trading, but without the guardrails.
Right, and without clear accountability. If your high-frequency trading firm does something wrong, there's a legal entity to hold responsible. If your AI agent sends a transaction you didn't intend, who's liable? You? The developer of the agent software? The platform it's running on?
That's a legal nightmare waiting to happen.
It is, and we don't really have frameworks for this yet. There's a quote from Balaji, founder of the Network School, where he says unpredictability of an AI agent acting on your behalf is a bug, not a feature. He points out there are many ways for things to go unpredictably wrong, and very few for them to go unpredictably right.
Like sending an email in your name to the wrong person, except in this case, it's sending your money to the wrong place.
Or making a trade based on misinterpreted sentiment, or getting caught in a flash crash. The tail risks are real.
So where does this leave us? Because on one hand, I can see the appeal. If you're trying to claim airdrops across multiple chains or you're monitoring wallet activity for security reasons, having an agent that handles that sounds useful.
It is useful. The question is whether we're building the right kind of useful, or whether we're just automating chaos.
And I'm guessing there's no easy answer to that.
Not yet, but I think there are a few things worth watching. First, watch for platform responses. Are exchanges or prediction markets starting to implement specific rules for agent activity? Are they requiring disclosure? Second, watch for losses. Not to be morbid, but the first few high-profile cases of people losing money because their agent made a bad trade are going to shape the conversation in a big way. And third, watch for regulatory signals. If the SEC or other agencies start making noise about autonomous trading systems, that's going to change how people use these tools.
And on the infrastructure side,
Watch which chains actually attract agent activity. Solana's trying to court it, Base is building rails for it, and ICP has some interesting technical advantages. Whichever ecosystem can provide the best combination of liquidity, low costs, and developer tools is going to end up hosting a lot of this experimentation.
but it's still early days.
Very. I mean, OpenClaw only became a thing a few months ago. We're watching the first generation of these tools figure out what they're even capable of. The real question is whether we build safeguards as we go, or whether we just move fast and deal with the consequences later.
Crypto has historically leaned towards the latter.
It has, which is part of what makes this moment interesting, because unlike most previous cycles where the risk was mostly about price volatility or protocol failures, this time the risk is about agency itself. Who's in control? Who's responsible? And what happens when the line between human and machine decision-making gets blurry?
Those aren't easy questions to answer.
No, but they're questions we need to be asking, because whether we like it or not, AI agents are already here. They're already trading, and how we respond to that is going to shape what crypto markets look like in the next few years.
All right, so if you're listening to this and you're thinking about setting up your own AI trading agent, maybe take a beat first.
Yeah, maybe start with something lower stakes. Let it handle your calendar before you let it handle your capital.
Good advice. And if you're just trying to make sense of all this, remember, it's not about whether AI agents are good or bad. It's about understanding what they can do, what they can't do, and the risks when you let them operate autonomously.
And keeping your eyes open, because this space is moving fast, and the only way to stay ahead of it is to pay attention.
Couldn't have said it better. Thanks for breaking this down with me.
Anytime.